S&P 500 futures market is heading higher. It looks like we're going to be gapping up for today's open in the cash markets. We did bounce really nicely off this 50-period moving average and kind of heading up higher. You're watching the Daily Stock Market Brief. My name is Michael Silva. Today's February 2nd, 2021. Sorry for not getting a video out to you yesterday, but I wanted to get it out before the market opened, so I'm going to do my best to do so here. We have a lot to talk about, but we're only going to stay really zoomed in on the S&P 500 and the dollar and some stock market indicators. And then I'm going to bring you some trading ideas. I have, I think, about 7 different trading ideas that I'm going to just share with you guys. Doesn't mean that they're ready to go ahead and enter into, but I'll walk you through my thought process given the current state of the market, bouncing from this 50-period moving average. It makes sense if the S&P 500 wants to continue ramping up to 4,000. These could make up for some pretty good opportunities, so I figured I'd share them with you. Let's go ahead and just hop into today's show. All right, welcome back. First, I want to just jump right into the cash market of the S&P 500. We had a pretty nice day the other day. You can see we gapped up and ramped up higher into the 5-period moving average. We're back within this trend line. So that trend line was broken once. We bounced from the lower Bollinger Band, and then we came right back up. So today, as looking at the futures market, it looks like we're going to be gapping up. So the area of resistance that I want to keep an eye on is going to be 38.25 in the S&P 500. That's today. Now the price percent oscillator is still pointing down at this particular point in time, and I'm going to be going through some indicators here shortly to show you that, hey, maybe this is just a temporary pullback to basically ramp higher. But there's also still some concerns out there that this is just a potential bounce and it's going to be forming itself a top. So one thing that I want to point out is if we get above 38.25, this will kind of make this not relevant anymore, but we do have somewhat of a left shoulder here ahead, and then we could be building out a right shoulder here, and then we could have a neckline right around 3,700. So that's a possibility for a head and shoulders pattern, which is a topping type cupping pattern like so, and then it could potentially head lower. So we're going to keep an eye out for that. 30-minute time frame. Look, we've just been having these gap down, and then we bam, ramped up. We came down pretty significantly, and then bam, ramped up. Now we're going to have a gap up. We're going to be coming into this area to try to probably close this gap today. So keep an eye out for that 384, 385 zone. If we do come in and close it, could present a good opportunity to head short. I have to wait to see kind of how today plays out, if it does even want to reach there. We did get into the oversold territory. We bounced perfectly on this support level, and then boom, right up to the top. So we're still putting in lower highs, so lower high, lower high, lower high, sorry, these two. And then we're putting in lower lows, low, lower low, lower low. So is this trend going to continue or not? And you can kind of see the head and shoulders pattern here kind of forming. You have the left shoulder, head, and then you could be building out a right shoulder right here too as well. So I'm going to be keeping an eye on these specific key levels, 385 for resistance to 384, this kind of area. And then as far as support goes, I'm going to be looking at 369 and 375 right here too as well for potential bounce opportunities. Now, if we start cracking below 369, the next level would be 365, which was where my eye would be. The next thing that I want to call out is the dollar. The dollar has been breaking out now of its falling wedge, which is bullish. So people have been saying, okay, the dollar is finding its bottom. We're going to start seeing it break out. This is going to put pressure on equities. That very may well be the fact. However, it takes time for these things to sometimes, for the market to react. As you can see, we had an update in the market yesterday, and we had an update in the dollar. They have been working in inverse correlation, which I'll bring up a chart here in a moment. But clearly, they both moved hand in hand as of yesterday. So we'll see if this is a temporary thing or if the breakout does continue in the dollar. If we do start seeing some strength, and it's not just like a couple little tiny moves, we need some real strength coming into the dollar. And we need to obviously move higher to start putting pressure on the equity market. When you look at this chart, you're looking at the dollar. That's the same falling wedge that we just looked at right here, but we just kind of made it smaller. And then the S&P 500, you can see both are structurally, in a technical pattern that haven't fully broken yet. We do have the dollar that's peeking its head out, and then the S&P 500 pulled down to this trend line, and then it bounced right from that. So that gives us clarification that this is actually a very important structural pattern right now with that current pullback these last couple of trading days, and then bounce from that level just as of yesterday. So we're gonna have to keep a close eye on this. This seems like the pattern and just kind of what everyone's keeping a close eye on. So Make sure we're monitoring that. On the daily time frame for the dollar, you can see that big green bar of strength coming in, 20 periods sloping up. So the intermediate term is starting to curl itself over. So we're swimming up a river still, right? 200's going down, 50's going down, but we got above the 50, we're above the 20, and now our target up here is about 92. That's where we originally said, hey, if we break down from 92, we're going to probably see a flush, bam, to the downside. Now we might be coming in for that back test. Both the RSI and the MACD look healthy here. Now let's look at some stock market indicators. First off, why could we bounce potentially higher? Well, look at the BPSPX. BPSPX we've talked about right when it got into oversold territory. It is there in oversold territory, and sometimes when it gets oversold like this, well, we can see the market rally. Another thing that I want to call out here is the NIMO. This is the a Nisey-McClellan oscillator. Now, interestingly enough, we had an update, a decent update, but we're still pulling a negative breath. So breath is still relatively weak on this pullback. So are we going to see some sort of like big burst of energy coming into the positive territory? I don't know yet. It's too early to tell, but we still have the negative divergence here and the negative divergence right here. These little bursts to the downside, these minus 60, these are overextended readings to the downside. And now what we're seeing is these little bounces take place in the market. So it's going to be interesting to see how this plays out. But that we did call out that it was a little bit overextended. Not quite like these, but when we did get these high overextended, we saw those bounces. Here's the sell signal. Still nothing triggered. We had a nice big uptick in the CPC, but then it came right back down. So the market's just at kind of full complacency still, full bullish. Nothing's changed there. However, I will say that the VIX volatility index, the fear index, is still really high. So we're at 30.24. So pay close attention to this. I mean, if it's just holding up here, that still says to me that, hey, we still have something big that could potentially happen. Now, if it starts drifting lower or heading lower, we'll start mapping out key levels. But as of right now, I just want to call out that, hey, it's still holding these relative high levels. And if we look at this is the utilities over SPY. This is the beta rotation strategy coming from Michael Gayed's white paper. We have the rate of change 4 weeks moving in more now into risk off territory. This doesn't mean that the market's going to crash, but what it does tell us is that the conditions for something to take place are there. And what we're seeing here is when it upticks into this rate of change, and we saw this week, we saw it on Friday, and we also saw it previous week too. And what do we see taking place? Well, we see the VIX, we see volatility increasing. That's what's so good about this specific indicator. Same with the lumber to gold, but this one is playing out right now. You can see the relative strength here, ratio XLU over SPY. It's kind of basing out. So utilities are kind of just basing out right here. Maybe we continue getting uptick. Maybe we don't. It's too hard to say. But what it is saying is, hey, be careful in this environment. Just be careful. All right, null new high-low index. We had a negative divergence going into that March crash. We still have a negative divergence with some pretty overextended readings. You can see we had the up day on the comp Q, and then it's not much going on here. So it's we're moving higher, but it's relatively weak looking so far. All right, so let's go over some trading ideas now because I just wanted to map out those key levels, and if the market does want to continue to go higher, well, we got to look at some charts to potentially play along with, and with all that stuff going on with the whole short squeeze targeting and all this stuff around Wall Street bets. I wanted to bring up some charts. Some of these, I forgot to write them down, but some of them have pretty high short floats, so you can get burned pretty bad with these specific type of trades. But if you're patient and you have a trading strategy and you manage your risk, they can be very rewarding if they do play out. So not all of them have a high short float, but you can go to shortsqueeze.com and you can type in the ticker symbol and you can see what their short float percentage is and the days to cover. Beyond that, if it doesn't show on shortsqueeze.com, you can actually go to Yahoo Finance, type in the ticker symbol, and then hit the statistics tab. In the statistics tab, it should show the short float percent as well and when it was recorded. So the first one I want to show is LRN. This one I did not pull up the short squeeze, but what I wanted to call out is the pullback into support, bounce, crash down, and now we're breaking back above this previous support and resistance. So this could be a nice bottoming pattern right here. You see the RSI strengthening, you see the MACD strengthening. Has a lot of upside potential here. And we're just starting to see it break out. So we are at the upper range of the Bollinger Band. We're above the 5 EMA. The 20 period sloping up right here too. I like the looks of this, and it makes for a good risk versus reward trade. So you can have a tight stop loss, and then you could play to see if this continues to move, break out from this specific level. Here is ticker symbol FAX. FAX was consolidating since about mid-December. You can see here it could be an ascending triangle because you're putting in higher lows right here. And then we had a pretty strong day with a lot of volume supported, and then we had the MACD crossover, bullish crossover. So this was resistance, and we finally got above it. This could make for a good opportunity too. Maybe we come back to back test 450 and then move higher. You can have a stop loss trailing underneath this daily candle, and then as every candle forms, you can move the stop loss up or just follow the 20-period moving average, whatever works best for you. Here's ACB. This one is one of the higher over this Aurora Cannabis. This is one of the higher shorted stocks, and you can see when it gets squeezed, like boom, 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 it moves fast. But what I want to call out here is high short float. I believe it's above 15%, 18% or something like that. I can't remember. But we're building higher lows, and we're running into this wall of resistance, ascending triangle. Okay, we had the 20 period sloping up, 50 sloping up, and we got above the 200. So this is, higher lows is building up. Maybe it's not the best time to get in right now, but if we start breaking above 1250, we might get another short squeeze. So be very careful on this because you can have some gnarly gaps. But yeah, you can play it a couple ways. You can speculate that it's going to break out, or you can just buy it on a breakout. So I like this one personally. I haven't entered into any of these yet. I'm going to see how they look on today's open. And then here we go, LXRX. I just wanted to call out bull flag, or bull pennant, whatever you want to say. Ascending triangle. MACD does look like it's about to start doing a bearish crossover. I tried to do that here on the same pattern, but then we broke out to the upside. RSI is pretty frothy right now too as well, but if we start getting above $9, that can squeeze us higher there too as well. It's all in bull context, really tight consolidation right here. I'm a big fan of these type of plays. Then we got ticker symbol OMER, another ascending triangle. You can see higher lows being built, and we're kind of running into this wall of resistance right around $20.50. So I'm going to be tracking this. If we start breaking above that, that could be the trigger to potentially move higher. Keep in mind in the RSI, it is still overbought, but as we've seen previously, bullish context, RSI is overbought. It can stay overbought for a long time, and that doesn't necessarily mean that it has to fall apart. But that also doesn't mean that it can't fall apart. So you got to, consider that too as well. Here's ticker symbol SOLO. This is another, I believe, highly shorted stock, and you can see squeezes that take place here. But we have just a nice, building higher lows, slowly consolidating sideways. Our resistance is right around $9.50. We had a nice hammer candle form here. Haven't seen too much volume come in as of lately, but I want to keep an eye on that. So you can do a couple ways here. You can speculate a breakout and just have a stop loss under this trend line, or you can wait for it to break out, get confirmation, and then play a squeeze into that momentum and kind of play from there. So I really like that one too, how that's set up. Reminds me of ticker symbol WWR, the one that I posted not too long ago. I don't know if I posted it here, Twitter or TikTok, but that was a nice squeeze there. Here's ticker symbol MVIS. This is, I believe, another pretty highly shorted one. But what I like about this one specifically too is just how bullish the context is right here. You see the 200 slope and pretty much just like from left to right to top right, and then you have the 50 period doing the same thing, and then the 20 period too. You put in the higher lows, and you have resistance right around 850. Okay, nice little hammer candle, doji candle right here, still kind of holding the 20 period moving average. You can speculate a breakout by entering in and then having a stop loss below the 20 period moving average, or you can wait patiently for a breakout and play into momentum, or play into the possibility that shorts would have to cover, which means that if they do cover, they're going to have to be buying back shares. So you have guaranteed buyers. A lot of guaranteed buyers have to come in and buy back their position if they are if they're wanting to get out, obviously. So yeah, I like this. That's the only, I think that's 1, 2, 3, 4, 5, 6, 7. Yeah, so those are the only charts that I have for you today. But yeah, hope that helps. Like I stated already earlier, we saw the S&P 500 pull back into an area of support. We're seeing it bounce from those levels, so we have to, consider the fact that it could very well want to ramp up and rally higher. We saw something very similar in 2000 happen, so it could be playing that same script. However, there's still causes for concern. We have the XLU over utilities telling us to, hey, be patient here, and then we also have the dollar breaking out of the falling wedge. So you have to be very tactical and very very aware of what's happening around you. So just be very careful. I don't really recommend shorting right now in this environment unless you're doing intraday shorts, simply just because just of what's been going on just around us in other various stocks. So you don't want to get caught in one of those squeezes. But intraday, it's totally fine. You can do scalps like that. It's works quite well actually. So that's all I got for you today. I will see you back here tomorrow.